Good morning. I'm Malcolm Grahamwood, and I'm back at Core Finance for my latest CEO interview. My guest today is Richard Herbert, CEO of Angus Energy. Richard, great to see you and welcome aboard.
Thank you, Malky. Very good to be here and good to be talking with you this morning.
Yeah, and we've got so much to talk about, so I'll kick straight on if I may. With today's two announcements on the CPR and the Balkan update, and also more recently production update and so on. Perhaps you can give us a little bit of an overview, and then we'll dive deeper into each one, if we may.
Certainly. Well, I think just to start with more of a sort of general overview of where Angus is. I mean, we're continuing to have a busy year. As you recall, in May of this year, we commissioned a new well at Saltfleet B and a second compressor, so that we have now been operating for a number of months at the full capability of the three wells that we now have on production. During the summer, we've made some minor interventions to improve plant efficiency, which was mainly focused around stabilization of condensate. But the plant is now up and running pretty much at the levels that we envisaged that it would be at. And we previously announced that we have a permanent flow line being installed for the new well, the B7 well, and that should be operating by the end of October. And that will be a big help because it'll bring down our operating costs, which are currently higher because of the temporary facilities that we're using. So that's sort of where we are from an operational perspective, but we have a lot of other things that are going on. I'll hand it back to you, Malky, to continue the story.
Okay, well, today you have announced the updated CPR, and you also had a word about Balkan. So let's drill down a bit deeper into the CPR. Obviously, there's a lot to tell us.
Sure, certainly. So we had done a CPR back in 2021 before the field came back into production. So this was the first time we've sort of looked at the reservoir model since then. We're able to put a year of production into the model, look at the history match from the wells that are producing. And we're pleased to see that the reservoir is behaving more or less as we thought it would do. We're not seeing any surprises from a production perspective. The other thing that we've seen is that the range of reserves between the sort of the most likely case and what I call the high confidence or P90 case has narrowed, which means that our uncertainty in reserves has come down a lot, which is also beneficial. Just talking about the numbers for a minute, the P50 case, the most likely case, the reserves have come down slightly from 2021 to 27.2 BCF, but a large reason for that is that we've taken a conservative view of gas shrinkage, which is the amount of gas that's consumed in the operations, compared to the 2021 case. And in the case of the P90 case, or the high confidence case, the reserves are up by 8 BCF to 24.2 BCF. So, we have a very solid foundation there with the reserves. And the other thing that the report talks about is the drilling of two additional wells in the field. We've modeled two more producers being drilled, one coming on production in early 2025 and the second one in early 2026. And these wells are strongly economic. And so we are now starting to make plans for drilling, probably starting in the final quarter of next year.
So timing of that is realistic, is it? You couldn't bring them forward a bit, but if you're going to drill the first one the end of next year, that's 6 to 9 months of preparation, and then 6 months to bring it on production. Yeah.
Yeah, I mean, these things, as you know, Malky, these things take time to plan, get everything in place. So we're just starting the work now on the planning, and once we've got a better idea of the timing, we can obviously share that.
So two quick questions from there. First of all, assuming the two extra wells come on by then. You'll have 5 wells in total, presumably all producing. What does the plateau then look like from the field?
Well, essentially, what we're doing with the 2 additional wells is sustaining the plateau that we've got. We have a number of options. We will probably see production go up when the new wells are drilled, but really the intent here is to try and sustain a stable level of production rather than have it sort of going up and down over time. So we have some stability through the next 18 months or so, but the new wells will allow us to sustain that production plateau out for longer, potentially out into 2027. And that information is contained in the CPR, which is on our website.
Excellent. And the CPR gave you quite a good deal on the allowances, the cost allowances, didn't they? I noticed.
Well, can you be a bit more specific on that, Malcy?
Well, on the machinery and how much you were paying for all that sort of stuff. When I was looking through the detail, it looked like you were quite, there were numbers that you put in which you seemed to be quite pleased about.
Yeah, no, I think the number we're not pleased about, of course, is the amount of tax that we have to pay. That makes things very challenging. And of course, when people compare the 2021 CPR with the new 2023 CPR, we've been able to maintain value despite a significant increase in the tax with the energy profits levy coming on. But I think for the other numbers and costs and allowances that have been used, we're pleased with it.
Excellent. Let's move across to Balcombe, shall we? And tell us what what the news is from there. Obviously, we've all seen the High Court decision, but perhaps you could explain it and tell us what it means to you and the timings and everything.
Yeah. So Balcombe, this is an old field that's been there for a long time. A well was drilled by the partnership that Angus is in about 10 years ago. And then in 2018, the well was tested. Obviously, we test a well to determine whether it's going to produce at commercial levels before a field goes into full-time production. And that test that was carried out in 2018 was a little bit inconclusive, as we put in the CPR, meaning we didn't get clarity over what the likely flow rates would be if the well was put onto long-term production. So we applied to do a long-term test, which means putting the well on production for months rather than a few days. And as a result of an appeal by a residents group, we were unable to move forward and do that testing. The case went to the High Court, and as we saw on Friday last week, it's been dismissed. There were 6 grounds under which the appeal against our test was tried to be thrown out, but it failed on all 6 of them. And so as a result of that, we're obviously now pleased that we can move forward with the work to test the well and determine whether we have a commercial oil field.
So what would be you would consider to be commercial there, and also can you remind me who the partners are in that group, Richard?
Well, as to the level of commerciality, I mean, to some extent it depends on reserves. It depends on flow rate. Whether it's oil or water, what the cost structure is. But I think we know that on the basis of an onshore UK production, we're looking at something which is able to sustain a few hundred barrels a day. Particularly at current oil prices, we would hope that would be commercial.
Yeah, yeah. And who's in the group? Who are the partners? I've completely forgotten.
Well, our major partner there is Quadrilla.
Of course, yeah.
We currently have a 25% interest. Quadrilla have most of the rest, and then there's a junior partner as well.
And you've said no fracking under any circumstances there, is that right?
We've never intended to frack this well. I think there's been some miscommunication maybe in the past. I mean, fracking is not currently permitted in the UK onshore, and it's not something that we are challenging. This field can be produced without having to hydraulically fracture the reservoir, and that's what we would like to do.
Yeah. Excellent.
But Malcy, we're very mindful that we're in a very sensitive area. We have to operate in a very respectful way and a careful way. We believe that's achievable.
So you think you can take the locals with you now that you've won the case, and you can make it as positive for them as possible, or is it going to be hard work all the way?
Well, I would like to think that having now resolved the things on the legal side, that we can find an accommodation, and that people will come to realise that Angus will operate in the right way and will do all the right things. That's what we have to demonstrate.
Yeah. Okay. We should go have a quick look at your Q3 production and operations update from a couple of weeks ago. Talk us through what are the basics. Reads from that.
Yeah, sure. So we announced third quarter production. We announced production quarterly. So we produced on average 2.6 million therms a month in the third quarter, a total of just under 8 million therms for the quarter. And we were very happy with those levels of production. Sort of going forwards, we expect to maintain the similar levels of production on this sort of plateau that I was talking about earlier. So to put this in perspective, if we're producing 2.6 million therms a month, we have a financial hedge on 1.5 million therms a month. That was the original hedging position that was established when the field development was first put in place. So that means that we have about 40 to 45% of our production is exposed to the full UK gas price, which is a good place to be now as we come into the winter period, and we're seeing strengthening in the gas price, and obviously a lot of volatility and uncertainty in energy supplies.
So you mentioned hedging. That's my next question, actually. So you're doing 1.5 million. Is that set in stone? Is it against the debt and everything else, or is that maneuverable at all, or would you be happy with about what you've got anyway?
Well, I mean, this was a hedge that was put in place to secure the initial debt that the field was redeveloped. We're locked into 1.5 million therms a month till June of next year, and then beyond that it drops to in simple terms it drops to about just under 700,000 therms a month for the final year. But we've also crystallized some of the hedge position from 2024-25. The hedges go away completely in June of 2025. But obviously, this is a legacy hedge position that was put in place at a time of different gas prices. What's important for us is that we can meet those hedge liabilities and produce over and above that to get the full benefit from strong gas prices.
Fantastic. Let's take a quick look at the debt situation, if we may, Richard, because the bridge conversion, which was due, I mean, it started in 28th of March for 3 million, 3 months and then rolled over, so expired at the end of September. You recently announced that that has been converted at 0.66 with a lockup. Talk us through the situation, why you needed it, and how you've decided to expedite it.
Okay, very good. Well, so we have our senior debt, which was used for the original development of Saltfleet B, which started out at 12 million, is now down to 6.3 million pounds because of the paying it down during the last 12 months or so. So we've made significant progress in bringing that down. As you said, Malcy, in March, we took on an additional £3 million of bridge loan to help us fund our drilling activities at Saltfleet B. And when that matured last month, the lender agreed to convert it into equity at the then current share price. So this was a good outcome for Angus. It helps to reduce our leverage, and it also signals strong support from this investor that he wants to be increase his shareholding in the company. We still have an additional £6 million of bridge loan that was taken out in July, and that has been rolled until January 2024, and it's our intent to pay that down through the refinancing exercise, which is currently underway, and we expect to have that completed by the end of the year. We
mentioned, and you've talked about it before, gas storage and CO2 injection. It's an area I find quite interesting. So have you anything to add on where you are on that front at the moment?
Yeah, there's not a lot of sort of tangible things to say at this stage, Malcy. I think, our current priority is to produce the gas that's in Saltfleet B in a safe and reliable way. I mean, we're in a time of significant uncertainty around energy security. As we said earlier, that we've got sort of extreme price volatility, and therefore, in our own small way, Saltfleet B can make a contribution to UK energy supply. Yeah. And I think you probably saw a recent government report that said that domestic gas supply has a quarter of the CO2 emissions that come from imported LNG, which we're increasing in ever increasing amounts. So obviously, short to medium term, our goal is to continue as a gas production business at Saltfleet B. But clearly, longer term, we're continuing to evaluate the potential for gas storage, given that it's a significant sized reservoir. It's the only significant gas reservoir onshore in the UK. We're actually building new reservoir models as we speak, which we can then use to test the sort of feasibility for gas injection, and we continue talking to potential strategic partners, but we don't have anything specific at this stage. But we'll obviously keep people informed as we move ahead.
Yeah, I think it's a long term. It's another good string to your bow, as they say. We're running out of time, so what I'd like to do now is to try and put everything together that you've talked about today, and do the traditional final question that I was asked. How would you like to see Angus over the next 12 to 18 months, given what you've told us about the reserves and the production and the debt and everything else? How do you see it looking over the next 12 to 18 months, Richard?
Okay, well, as far as I'm concerned, Malcy, I have sort of 4 key priorities for Angus in the next 12 months or so. The first one, as I was just saying, is maintain safe, reliable operations at Saltfleet B, and ensure that this is our cornerstone asset. This is the cash engine of Angus. So we have to really focus on that and make that asset perform. And I think we made a lot of progress on that in the last few months. Secondly, is to stabilize our financial position. We've talked a bit about raising additional bridge loans, and clearly in the past we had some issues with the late startup of production, which was very expensive from a hedging perspective. We had cost overruns on the plant and the well, which have necessitated this additional short-term debt that we've taken on. But as we manage our way through this, I want to put the company on a very sound financial footing, ensure that we've got a strong balance sheet going forwards. And I think the refinancing that we're currently working on will complete this transformation. Thirdly, we talked about BCAM. I mean, we have a number of oil fields in the southern part of England, and they're currently not producing, any of them. I'd like to see, we're reviewing the opportunities there to reactivate them and to move the BCAM project forwards. And so that's another area where I think we'll get increasing clarity over the next few months. And finally, of course, we all would like to see a sort of future based on growth.
Yeah.
And so we will continue to evaluate new opportunities that would be complementary with our strategy and our portfolio. And again, in the next 12 to 18 months, I would very much like to see some progress in that area as well.
Well, that's excellent, Richard. It's been great to talk to you today. Thank you very much for your time. It's very kind of you to join me for my CEO interview. So thank you very much indeed. Thank you very much. I've been Malcolm Graham Wood doing my Core Finance CEO interview. My guest today has been Richard Herbert, CEO of Angus Energy. I'd like to thank him very much indeed for joining me. And I'd like to thank you for watching. Thanks very much indeed. Bye now.